Hello and welcome to this special edition on the CPI number for the month of December. The number has just been announced and I think it's coming in at 2.19%. That's pretty close to what our poll threw up. Our poll threw up a number of 2.26%. So it's just about 5 basis points lower and therefore pretty much in line with expectations. We should be getting more details in just a minute. Okay, we have the food CPI number, and that again is a fairly low number. The food CPI number has come in at minus 2.5%. So while November it was minus 2.6, the food CPI for the month of December has come in at minus 2.5. So once again, it is food that is the culprit in terms of the lower than expected CPI number. The overall CPI number is not very different. It is still 20 basis points, or not 20, okay, it's about 14 basis points lower than November. November was 2.33, and the December number coming in at 2.19%. Now, we must know that there is a normal tendency for prices to fall in the month of December. Vegetable and fruit prices normally fall. So the 2.5% contraction in food prices doesn't come as a surprise. In fact, what surprises me is that it's not as bad as one feared. Even the WPI number indicated that the food disinflation, the pace of food disinflation has probably declined. I'll just quickly mention the individual percentages of each of the products. Cereals, the inflation is 1.25%. Meat and fish have risen by 5%. Eggs have fallen by 4%. Year-on-year prices fallen by 4.3, that is minus 4.3. Milk products flat, 0.85, so no change in prices. Oils and fats up by 1.4%. Fruit minus 1.4%, so fall. Vegetables is a fairly steep fall of 16%. Remember, in November, it had fallen by 26%. So this is a fall by 16%. Pulses minus 7%. Sugar minus 9%. Spices are up 2.8% and non-alcoholic beverages up by 3.96%. Prepared meals up by 3.83%. So overall food and beverages is minus 4.9%. If you only took food and not beverages, then it is minus 2.5% as we indicated earlier. Okay, then let me come now to clothing. Clothing is up 3.56%. Footwear is up 3.26%. Okay, then we come to housing. Housing is up 5.3%. That's important. And fuel is up 4.5%. Let me come to the big category of services, and there things have actually picked up. Oh my God, household services is up 6.3%. Health services are up 9.02%. Transport and communication up 4.3%. Recreation and amusement 6.05%. Education is up 8.38%. I mean, this is looking like seriously higher. Education up 8.38% and personal care and effects are up 4.58%. So overall miscellaneous normally refers to services. That is services of health, education, household services, recreation and personal care. That together is up 6.45%. Now that's very close to the core inflation that we normally discuss. That's looking unusually high. So the general index is up 2.19. Food inflation is minus 2.5, but services is up 6.45%. Let me straight away go to our guests. We have been joined by Soumyakanti Ghosh, the Chief Economic Advisor of SBI, Tushar Arora, economist at HDFC Bank, Crisil's D.K. Joshi and Upasana Bhardwaj of Kotak Mahindra Bank. Gentlemen and ladies, thank you very much. Soumya, first up, I think you would have the core inflation number already calculated. That's looking higher, isn't it?
Yeah, actually core has come at the same level as last month, which was at 5.73%. But I find the numbers a little surprising because the health actually has significantly increased, and that are completely at variance with the demand which we are witnessing in terms of the leading indicators. So I think there was again a jump in health, if you remember, in one of the months. Then it stabilized. Again, it has jumped now. So we need to seriously understand why there is such a significant jump across all sectors when actually the overall demand condition has deteriorated in the month of November and December. So from that perspective, the numbers could actually, if the core number, we were expecting the core number to significantly decline to below 5.5%, but staying at this level means that the demand conditions has remained robust, which is at variance with what the other indicators are showing. So maybe we have to understand why this contrasting trend is coming out from the price data and the volume data.
Okay, why I thought the core would come in higher because the individual numbers for each of the services is well over 6%. I mean, household goods and services 6.38, health 9%. Transport is the only one which is lower at 5.3, that's understandable. Recreation is 6%, education is 8.38%, and personal care and effects is at 4.58%. In spite of it, the core comes below 6, Soumya?
Yes, it is coming exactly at 5.73. If you remember, the December core actually, given the transport decline, the core was actually supposed to decline if you're considering the base effect. Right. So from that point of view, the core is actually higher than the market consensus by 40 basis points. Okay. So that number is actually not so comforting.
Oh, not so comforting. Mr. Joshi, what would your thoughts be of this number? I also wanted your comments on food disinflation. Is it at least bottoming out?
I think our sense is that it will bottom out and next year would see higher food inflation. I think a couple of reasons for that. One, I think, as I said earlier, there is risk of a monsoon failure next year, though one can't be certain, but definitely El Nino conditions are being talked about. So that is one. Second, I think the global food prices have also started rising, and I think the forecast is of modest increase. So clearly, I think some pressure on food inflation is likely to build. It has seen a secular decline for a long time, and I don't think we have agriculturally reached a stage where I think we can manage such low food inflation. It's going to bottom out, and I think next year it could become a driver of overall inflation.
Oh, okay. Well, at the moment, at least it is -2.5, and perhaps that will be some succor to the beleaguered farm sector as well. But we have to see, of course, what the impact will be on the overall headline inflation. Upasana, your first thoughts? What do these numbers tell you? Soumya is worried about the core inflation being 40 basis points higher than market estimates. Upasana, we are not able to hear. Okay, Upasana, we'll just come back to you. There is an audio issue. Can Tushar hear me? Okay, I'll just get back to Tushar and Upasana. Soumya, what other thoughts? I mean, what would your thoughts be on food disinflation?
No, food inflation has come in as expected, but in the morning, if you look into the mandi prices of vegetable WPI, that had actually declined by 19% this month. So from that point of view, I think the entire pass-through has not happened in either the WPI or in the CPI, so that food inflation trend of decline will continue. But I am a little bit flummoxed by the core uptick, where all indicators of the volume indicators in terms of passenger vehicles, light commercial vehicles, credit growth, consumption growth, even the CSO numbers which was released last the month, that is actually showing that the consumption growth should decelerate to 5% in the second half. So against all these odds, this core number is actually a little bit baffling, that why there has been sudden significant jump in the health and education sector, which was all along showing a stable trend.
Okay. No, I can understand that. But Soumya, the anecdotal evidence we have got while we go through result season has been that it only looks like those sectors that were affected by NBFCs, like autos, have shown a dip. The FMCG sector, we just recently spoke with the paint industry, and they were speaking about an extremely robust third quarter. So maybe, the experience of different sectors has been different. Those dependent on NBFC or on credit are perhaps more impacted. But those like FMCG, which are not dependent on credit, seem to have done much better. though we, of course, await granular data on it. This is more anecdotal. If we have Tushar, okay, Upasana, you were telling us something and we couldn't hear you. Your thoughts on all the numbers, core as well as food and fuel.
Yes, headline is actually, Lata, 10 basis lower than what we were expecting. But core, we are definitely disappointed because we were looking at a 5.2%. As against the actual outturn of about 5.7%. So clearly there's a sharp uptake, and that is not boding well. Of course, on the food disinflation side, yes, I would agree with Dr. Joshi that the trend now, we seem to have bottomed out on the disinflation side. Going ahead, there's one more point apart from global food prices and the normalization. I think the agricultural real rural wages have started going up, which means somewhere the cost push inflation should also start resulting in higher food inflation eventually. Very marginally though, just last two readings that we have recently got, I mean, that is suggesting that the agricultural inflation, rural inflation is picking up in terms of wages.
Okay.
And hence that will eventually start passing on, and that should result in food inflation going relatively higher.
Okay, okay, that would be a positive at this point in time. We have almost thirsting for some bit of inflation in food prices. The disinflation has become so severe. Tushar Arora, well, good to have you on the show. I'm sorry we just lost connectivity briefly. What's your sense of, the people have already discussed that the core numbers are looking a little surprisingly high. Would you now want to redraw your trajectory for Jan, Feb, March? What are your numbers in any case?
Well, I would keep the equation very simplistic, and I think the RBI has reiterated this number of times that they just look at the headline inflation as a target. And I think when the MPC meets next time, I think they would again be focusing on the headline number, which continues to be low. And for next 7 months, I think until at least July, we are expecting the headline number to not go beyond 4%. So that's, I think, opening some room for rate cut. We have penciled in a rate cut by April, if not February. And I think core number, we certainly need to dig in more. We certainly need to understand why the services inflation is going up. But I think from the inflation targeting perspective, the central bank would keep the equation very simple. Okay.
No, actually, thanks for bringing the question back to where the action is. Will this number lead to a rate cut, Soumya?
No, I think there is a possibility of a rate cut in February, but the important thing is that I think the central bank, even though it is looking to the headline inflation, but I think it should flag the core inflation, because core inflation, if I look into this number, has hardly declined significantly from the levels of, say, June 18 when it was at 6.4%, even though the headline inflation is rapidly declining from, say, around 5% to 2.19% now. So I think that will be flagged by the RBI, the MPC committee. And my point is that I think there is still a 50-50 chance of a rate action in February, but definitely I think the stance will change to neutral.
Okay, fair point. Mr. Joshi, how would you put it? Your thesis is that we are probably troughing out on food prices. Upasana is adding to it by saying that rural inflation, wage inflation is marginally picking up, also marginally. And you have a core inflation number which is actually higher than market estimates. There is also this talk of a very big package coming from the government, at least as an announcement for the next year, if not right away, which could mean a higher than comfort zone fiscal deficit. How will the MPC approach this cocktail? After all, the MPC doesn't look at lagged numbers. It will look at 1 year forward inflation numbers.
Well, I think as far as the core inflation is concerned, I think it's a little perplexing, because if you look at the recent GDP release, the second half is expected to be much slower than first half. So, and demand, particularly consumption demand, is slowing down at a pretty fast rate. So how come core inflation is high, or rising? So I don't see demand conditions in general pushing up core inflation. I think one needs to look at it more closely. Because demand conditions are definitely slowing. So why is core inflation rising? Is it because of sticky components like education and health, etc., which have never come down? I think I haven't seen lower inflation in these in several years. But I think as far as the monetary policy is concerned, I don't think there is going to be a rate, though the probability is rising, but definitely there could be a change of stance to neutral. I mean, given that overall inflation, which is the target of the central bank, is now slowing down and is much lower than expected. So some indication that rate cut could be coming if these conditions continue.
Okay. No, I am going to ask you to vote on whether there's a rate cut or not, but I'll give you a little bit time for that. Upasana, what's your sense? What does the RBI do on February first week when they meet, the MPC meets? And more importantly, more immediately, how is the market going to react to this number? While the headline inflation is almost in line with expectation at 2.2 compared to a poll of 2.25, the core is higher. So how will the market react tomorrow? That's one question. How will the MPC react in February?
Yeah, Lata, I think for the markets, the headline is more or less in line with what expectation was. But here there's a slight, disappointment because of the core inflation, and hence I think there's a slight negative tilt possible in tomorrow's opening. Also, we must realize that the market is kind of pricing in a rate cut in April and not in February at this point in time. So that probably reinforces their case for a no rate cut possibility in February. That is one thing. From a monetary policy angle, if you were to ask me my view, there are two things. One is, of course, the fiscal risk that you've just mentioned about. Along with that, there's also a reversal in crude oil prices that we've seen, and a significant reversal from a $50 barrel to close to 60. So that 20-21% increase that we've seen, which kind of suggests there's kind of volatility going ahead. And at the same time, we have a 4th May, Iran sanctions, which were kind of with the leeway that was provided, that also needs to be relooked at. So some kind of volatility will be expected on the oil prices. So both these factors probably require a little bit more caution, and yet shift the stance to neutral, because yes, the headline inflation trajectory is fairly benign, and yes, the headline inflation even 6 to 9 months down the line looks benign. Even if there is a rural stimulus, we are looking at about 4 to 4.3% range towards the second half of next year. So there could be an upside risk to that. That also doesn't look as threatening.
Oh, absolutely.
So hence, the room for rate cut is there, but probably to begin with, it should be with a neutral stance first and then follow it up with rate cuts.
Okay, that's very clear, crystal clear. Let me come to Tushar, the man who put the issue on the table. Tushar, you're expecting, can you vote on two things? Assume if all of you can wear an MPC hat at this point in time, and tell me, February, what are you expecting on stance? What are you expecting on rates? Tushar.
I think stance, it's almost a given thing that everybody's anticipating it would change to neutral. In terms of rate cut, I think the likelihood is less for February and more for April, because I think the MPC members would take some time to.
So should I take yours as a no?
Yeah, I think the chances are more for a hold in February, and I think by April, I think we should be able to see a rate cut.
Fair point.
Just in terms of how they should be, or how they might be reading it, I think 1 or 2 months of upside surprises, I think, are generally taken as noise in the data. So if we have a noise in CPI inflation data, we must not forget, February, last Friday, the IIP data also showed up, throwed up with some surprises. So there's noise on the IIP side as well. Some of the growth indicators are also not looking very good. So I think, at the underlying momentum, growth is, I think, flattish. Inflation is going down, and I think that makes a case for a rate cut, I think, down the line.
Down the line. Okay, but you're going with a shift of stance and a hold in terms of action. Soumya?
Yes, I think the first is that I think I again emphasize that I think the CSO data on growth and inflation are contradictory, because one is giving out that the growth is weak, the other is giving out that the growth is strong. So from that point of view, I still believe that there could be some issues with the data, because at this jump I have not seen in the last 2.5 years with so it seems a structural break in the core inflation data for this current month. Now, having said that, I think given the core inflation data, even though the central bank may be targeting the headline inflation, I think now the point is that there will be a pause in February, and the central bank will like to see out whether the data is actually, there is a noise in the data, or it's a structural break, or it's just a one-off blip factor, and then take a conscious call in April. Okay. But February, there is change in the stance is possibly a given, but a rate cut may have to wait for 2 months.
Okay. Mr. Joshi, your expectation in February from the MPC?
Yeah, I agree with the consensus. I think change in the stance, because you can't cut rate with a calibrated tightening stance. So I think the rate will, the stance will become neutral. And then I think if these conditions prevail, you will see a rate cut in April.
Okay, so this is a consensus I'm getting from my rough and ready MPC over here, that all of you are expecting pause, a shift in the stance to neutral, and a pause in terms of action. No action, a cut will probably be more likely in April. I still have about a few minutes, so let me quickly get whether you're going to change your trajectory of inflation looking at the way core has performed in December. Soumya, you go first. What is your March end inflation number, and will you change it?
See, I think we are expecting an inflation number close to 2% or a tad below and above 2%. So from that point of view, you are expecting a March inflation number to be close to 3%. So we still maintain that the March inflation number could be around 3 to 3.1%. Okay. And the total average for the current fiscal year should be around 3.5% or at best 3.6%. Okay. Next year average looks a little closer to 4.5%. Okay. But you can expect that the current headline inflation meltdown continue till at least July. So the first 6 months of the calendar year 2019 will continue to see softer inflation prints.
Okay, making a good case perhaps for rate cut later on. Upasana, your thoughts, what is your current March forecast, and if you have even your FY20 forecast, and will you change it going by this unusual spike or unusually higher than expected core?
Lata, firstly, for core, we'll have to wait for at least some more information to really take a call on whether this sustains or this is a one-off. So I would not like to change my view right now based on that account. But yes, there's a 10 basis of a decline. The inflation is 10 basis lower than what we were expecting. So there'll be a marginal shift or change in our numbers, but not really much. We were expecting around 3.4 to 3.5% by March, and we probably would stick to that. And going ahead into March 2020, we're expecting about 4.3%. So that is the trajectory we're looking at as of now, and we'd like to retain that.
Okay. Mr. Joshi?
Our average forecast for this year is currently at 3.7% and next year 4.5%. The March number is around 3.7, 3.8, I think.
Okay. And no reason to change it because of what you saw today? No.
No,
okay.
We were expecting 2.2% inflation today. So.
All right, so it's come entirely as you expected. Tushar, after looking at this core number, would you want to revise your current numbers, and what are your current numbers?
No, not yet. I think we'll wait for more data. Until July, likely to remain below 4%. January to March quarter, we're expecting an average of 2.9, and the first half of FY20, we're expecting an average of 3.7. So I think that's a pretty comfortable trajectory for inflation.
Fair point. Thank you very much, Soumya, Tushar, Mr. Joshi and Upasana for joining in this conversation and making sense of the inflation number. Key takeaways from the numbers and our guests. One, the inflation number is slightly lower than what the street was expecting. The surprise is that core inflation is a good 40 basis point higher than what the street was expecting. It's come in at about 5.7%. The market expectation was more at 5.2%. It's a bit of a surprise, the core inflation number, which is basically the services inflation, non-food, non-fuel inflation number. A third takeaway from our guests is that possibly we are reaching the end of the food disinflation. It's 2.5% contraction of food prices compared to 2.6% in the previous month. There is a minor rise in rural wages, and perhaps, therefore, we could see the end of food disinflation, or at least a troughing out of food prices. That's the third takeaway. A fourth takeaway is that all of them expect the Monetary Policy Committee to shift to neutral in February, but may not go to the extent of a rate cut. They may want to look for more evidence and deliver that rate cut in April. And a fifth takeaway from all of them is that there is going to be a benign, even if core inflation is spiked more than expected in the month of December, generally inflation is going to remain at about at under 3% up until March, and perhaps up under 3.5% or 3.6% even in the first half of FY20. And therefore, there is an elbow room for rate action, if not in February, at least in April. Those are the key takeaways from my panel of experts. Thank you very much for watching this special show on the December inflation numbers. Keep it with CNBC TV 18. There is more news that follows shortly.